Rising rates, rising prices.
How this is going to affect the real estate market this fall?
Let's find out. And we are back with another market update for the month of August in Queens. Let's find out the data. Looking at the most current data from OneKey MLS for residential, condos, and co-ops, we currently have 5,400 listings on the market. So we have 1,500 new listings on the market, which is about 14% down from the same time last year. We have 972 pending on the market, which is about 14% down from the same time last year. And we have 909 closings on the market, which is about 19% down from the same time last year.
So on average, these homes were on the market for 72 days before closing. For single families and multifamilies, the average list price was about $990,000, and the average sold price for single and multi was about $890,000, which is 10% higher from just a year ago. For condos and co-ops, the average list price was about $379,000. The average sold price for condos and co-ops was about $358,000. That's about 5% higher from just a year ago. As we see the US housing market starting to cool down a bit because of the rising interest rates, the Fed has met for the 5th time already, and the 5th time in a row they raised the rates again, 0.75%. We have the record prices plus high rates. It's really slowing down the market. And you're working with a lot of buyers and sellers in the field. So like, what do you see from the trenches?
So first thing I see is days on the market, right? Slowed down a little bit, but they're still selling relatively quick.
If it's priced right.
If it's priced right. So that's the most important thing with the sellers. It has to be priced right. Second thing I'm seeing, even with rising mortgage rates, people are still buying. If you're a serious buyer, right, and you have to have the motivation and your finances are in good shape, you're still buying. For the past 2 years, a lot of buyers have been waiving contingencies to just get their offer accepted in a multi-offer situation to make themselves a little stronger. So now we're seeing that the contingencies are coming back.
And when you say contingency, just for the viewers to understand, you mean like an appraisal, home inspection, right? To actually be able to inspect the home, because for the past almost 2 years, where we were in extremely strong sales market, where the buyers couldn't even do a home inspection, no appraisals, right? So if you were buying a home which was $50,000 over the market value, you had to come up with the money out of pocket. So what we see right now, the sellers really, they super realistic.
67% of sellers are now going back saying that buyers are now negotiating with the sellers on the repairs that they're finding in the home inspection, which we didn't see.
That's huge.
For the past 2 years. So
it's funny how quickly the market turned, because even though we're still sitting on about 6 months of inventory, which still we could say we are in sales market because it's really 7 months of inventory, kind of like the borderline. But we see the conditions come off, just within 2 months. 2 months ago, you wanted to buy a home, no inspection, no appraisal. You had to go $100,000 over the asking price, and you had to write an offer on the day one, otherwise you lose the home, right? And 2 months, the sellers now, they're reducing the prices. They're super realistic, where they're letting people go through the house and actually submit an offer, so they don't actually offer right away. They'll let you do a home inspection. There's some great opportunity for buyers, because what we also see is sellers actually giving credit to the buyers, either in a form of sales concession, right? Which we do work with a lot of buyers, where now they can take advantage of basically having the closing costs being rolled into the mortgage, so they can save the money, maybe put more money towards the down payment and buy a bigger of a home, or maybe fix something in the house. Or some buyers, they're actually using that credit to buy down their rate, right? So you could get a credit from a seller to use it to buy down your rate, and now your monthly payment is going to be even cheaper. So you can have a lower monthly payment, or you can buy bigger of a home. So it's definitely a fair market, and we see more opportunities for both buyers and sellers.
A lot of buyers are now sidelined, right, with the rising rates and prices. So definitely less competition, and buyers have a lot more buying power, right, to negotiate. Don't be so fixated on interest rates and, the high prices. Your best goal is to just jump right in. Because let's just say you're renting right now, you're paying straight interest with no write-offs, right? But when you own a home, you're gaining equity, you're paying for interest, but at the end of the year, you're going to write that off. And we're still seeing homes appreciating. So your home is still going to go up in value. So, don't set your mind too hard on prices and interest rates right now. If you're a serious buyer, this is you gotta jump in, man. This is the best market for you guys.
For the sale, if you are in transition and you're looking to sell your place and make a move, are you looking to buy something smaller, maybe something bigger? So then keep in mind, you want to sell high and you want to buy low. And this is exactly the market which we are in right now. So the key is to really don't chase the market, step right in front of it. So you got to price the home right, make sure that it's promoted correctly so you can really get it sold and then get something nice on the buying side, where you can now take a little extra time to negotiate and really make sure you get the good terms. And
homes are still selling. There's still motivated buyers out there. You'll still get top dollar for your home, but you have to price it correctly. It's the most important thing. And if you're worried about, looking for something else after you sell the home, there's plenty of options. You'll have more inventory to look for and a better chance to negotiate.
Because, what I see, we're really going into a skill-based market where you really have to pick the right professional. We see deals going south just because of stupid mistakes, right? On the behalf of the bankers, the agents, the attorneys, the title companies. So really choose your profession you're working with carefully, whether it's an attorney, make sure he's a real estate attorney, make sure he's well versed with REOs if you're looking to buy an REO, right? Because REO property versus a traditional sale, completely different terms on the contracts, right? And we see attorneys when they get an REO contract, they're like, so if you're getting a right profession, just an example, an attorney, right? If you're getting an attorney, has to be a real estate attorney, versed in, with a real estate transaction. If you're looking to buy an REO contract versus a traditional contracts, completely different story, right? If you don't have the right professional, we see deals, going south because of a stupid mistake. So I encourage you, take the time to at least interview 3 different professionals, really with them, maybe talk to someone who they did transaction with recently, see how many transactions they're doing per year, right? Like how often they are in the game. Because we see deals going south for absolutely no reasons. So guys, this is it. I hope you find this helpful. Again, please subscribe, share it, and comment. We'll catch you on the next one.